Welcome to our show. Today we're covering questions from the audience, and we'll be also discussing some first-time homebuyer programs that may be available for everyone out there. And thank you for listening to our show. And Jessica, good afternoon, good evening. How are you doing?
Wonderful. I'm so excited to hit these questions. I think they come up all the time.
Yes.
And really excited to go over programs because I know so many people, like the phones just started ringing off the hook, people that want to be able to get into a home and are wondering how to do it.
Yeah, absolutely. I mean, you get, especially right now, we're approaching our busy time, right?
This is busy time. This is our spring.
Yeah.
Yes.
Yeah. It's I've just noticed from January 1st onward, getting a lot more phone calls, getting a lot more applications. Just in last week, compared to 2 weeks ago, applications for mortgages, they went up over 9% and again 9% week over week. So that's telling us that there's a lot more activity coming out. We're seeing homes pending. That the house that we had listed for, in the millions, finally went pending. Another house went pending. Everything's going pending now. This is a sign. This is the tip over. We're on top of that hill that we've been talking about for 6 months, right?
I think this just speaks to your point of the fact that you were right. You've been talking about this for quite a while, and I'm glad we have the show as a documentation of, we're in a sweet spot right now where it's still a buyer's market. But if you wait to be able to purchase and you wait to get these programs ready so that you could go purchase, it could swing the other direction really quick. And we're seeing the momentum pick up already, which tells me I think we're 3 months out from a complete swing the other direction.
Yeah.
So I really want to get our borrowers in, which I'm meeting with several of them on Saturday. This coming week, I want to make sure that we are out looking at properties and writing offers right now. It's still a buyer's market before it swings back to a seller's market, because that is happening.
Exactly. It is happening. It happened right in front of our face. Yes. I think one of our team members, Tony, he had shown a property in Roseville. And that property was priced at like the 560 range, and it was in a good little neighborhood. 16 offers.
Dang.
Right.
We haven't seen that in over a year. 16 offers. We just haven't.
It's coming. So
coming back.
The time is it's cuffing. Right. Rates have been slowly coming down. They're not where we were, but where we are on mortgage applications, we're at the same point we were in April of last year.
Oh, that is exciting.
So that is exciting.
Yeah, very exciting.
Seen more applications come in the course of 30 days than I've seen in the entire 12 months. It's ridiculous. Like the amount of applications that have come in, it just seems like everyone's starting to bustle and hustle and starting looking for property, and getting those deals on the homes that we've been talking about, that you've been talking about, is important, right? Because you're always able to get credit in a buyer's market, right? You're able to get the temporary buy downs and things like that,
and closing costs.
That's about to go away.
I have been preaching from my soapbox for the last several months about this. Get into contract now. If you're not ready, let's make sure that we get you ready. We're going to talk about the programs that could suit you. We're going to talk about what you need to get ready, but don't wait. And if you think that you're ready, call right away. Call us right away so that we can take a look at, we can do a soft pull with the credit, get an application, and we know what we're working with, and we won't have a little hiccup from Comcast 9 years ago show up that ends up making us wait. We don't want to have to wait, because we're in a sweet spot right now, and that sweet spot will not last long. This is like, just strike while the iron's hot, because I'm telling you, it can change. So you and I have seen this. It changes so quickly. And then people go, wait, what happened? Why didn't you tell me? We're like, we did. We've been preaching this.
Yeah. It's happened. The thing that you're saying there is call right away. And the reason why you want to call, most people look at houses first.
Right.
They don't want to talk about the financing. You need money to buy the house, right? So it would be a good idea to understand what you qualify for if you got anything jacked up on your credit. We talked about on the show last time.
Right.
Talked about credit and preparing for credit. So if you're considering buying a home in the next 6 months, then you don't want to miss this, because on the show here today, we're going to be talking about the Dream for All program that Cal HAFA is going to be releasing in the spring. They didn't give a definitive date.
Okay.
This program, folks, it disappeared in 5 days. right? And so,
I was lucky enough to get buyers into contract during that period of time, but it was a real race. And the way they had it structured before was you couldn't get in for the counseling that's required until you were in contract.
That's right.
So I got them into contract within 3 days of pre-approval, and we did get in, but it was a scary little, we didn't know if we were going to make it.
And that's because they were probably approved for a CalHFA, a down payment assistance program, had not gone in contract yet.
Correct.
But that is the thing. You have to go through the Homebuyer education workshop, and you have to get your little certificate. If you want to do this and you want to prepare for this California Dream program or any other down payment assistance programs, log on to promortgagerealty.com, fill in your information there and contact us and just indicate what you're looking to do. And I'll connect you with Jessica on the property after we work with getting you pre-approved. I'll direct you to exactly where you need to go. This is no cost, no charge, no pressure. We'll tell you where to go to fill up and get prepared, because these classes, like you said, they backed up 3 months and it backed up.
Yeah.
And so you lose your opportunity right there. And $220 million out of that Dream for All program was allotted in less than a week. Okay, so that is how much people like the product.
Right.
And just so everyone understands what it is, the Dream for All program is different. You know, every day we have what's called the CalHFA My Home program, and that program is delegated where you get 3.5% down or 3% of your down payment, which you can get 2 loans for, one conventional, one FHA, and they'll bring that down payment to the table. Right. And that is a silent second at a 1% interest bearing second. And it's a silent second, meaning you don't pay on it. But when you go to refinance, when you go to sell, you have to pay it back. And so that means you're combining the 2 loans into one, and it gets you into the home, which is great. But you still have to pay for closing costs, which is why we've been screaming to get into these now, because you can negotiate seller credits to cover these closing costs. So
right now we still can. You're absolutely right.
You can on certain properties. You know, on a brand new listing may not be easy, but on a more established listing and been on the market for 2 or 3 weeks, easy to negotiate.
That is what we're looking for right now. And this is something that our audience can do on their own. Check Zillow, ask me for a link to MLS. When you see properties that have been on the market over 60 days, I can get you a credit. When we have properties on the market 0 and 1 days, probably unlikely, because they're going to have multiple offers. We just, we were up against this with one of our borrowers that wasn't able to qualify, wasn't able to get into something last year. She was qualified. She found something, and there were like 6 offers. We wrote an offer on it, but we weren't able to get it. We needed the credits. So when you see properties 60 days and more, we are going to get you credits, no problem. But when they're brand new to market, it's a lot harder to do. And as we start seeing new things come to market and have, 6 to 16 offers, that is your indicator that the market has changed, and we will not be able to get those credits any longer. And we're not going to see homes that are on the market 60 days and longer. Yeah. So we're in a really sweet spot right now that I just don't want our friends and family to not take advantage of.
If you're a homeowner and you got your house listed for sale for longer than 2 weeks on the market or 3 weeks on the market, you need to call Jessica, because we've got a list of buyers that are already pre-approved waiting to get in contract. I mean, I can list about 5 people right now that are just keep getting bid out on cash offers. And if you don't want to take a cash offer, you want a family moving into that home, we've got buyers for you. So Jessica, real quick, I want to plug in, how do they get a hold of you on a slow number? How do they get a hold of you, just so that they can if they can't sell their home or they need a buyer and they're not getting pending in contract, what's your phone number?
916-532-8916. You can call or text me. And if you are somebody who listed, I run into this often where they're like, it's my cousin or it's my, sister's cousin, and I had to use her for whatever reason and it's just not working out. Maybe I can just give you some advice on where the property needs to be priced, or upgrading the photos, or upgrading the marketing. I find it so interesting. Sometimes I'll meet with people and they'll say, hey, my house isn't moving. And I'd say, okay, well, how'd you come up with the price? I'm not really sure. What was your marketing plan?
Made it up.
A marketing plan? Is that something we should have gone over? And I'm like, indeed it is. So I think there's a few steps to the process in getting your house on the market and then putting it at a price, listing it at a price that's going to move. Yeah. Depending on what season we're in. Is it a buyer's market? Is it a seller's market? Are there 5 other properties that are just alike within your neighborhood? These things all have to align for you to have a buyer come in and take advantage of that deal. I
tell you what, buyer's market is going away.
It is.
It is going away. So as those who are waiting for rates to drop, when you wait for the rates to drop again, you're like,
by the time the rate drops again, your opportunity's done.
You're done. Your opportunity to get a home at a price that is great. You get your house, you get your deal when you purchase the house, right?
Yes.
You get it on the price, and then you also get it on the kind of credits that you can get and the negotiation of repairs that you can get.
Yeah.
Well, in a seller's market, no contingencies, no movement on price. It's probably going up in price.
True.
And you can always position yourself to get a good price. And the biggest thing here is that a lot of people shoot for new construction on their first home. They want the open floor plan. Well, who doesn't?
Sure.
Right? This is a key thing. Get into a home now, have it check some of your boxes, and then let some equity build up. Now you've got a down payment for a better home or a rental in the future.
Yeah.
And I know that's your play, Jessica.
I'm a buy and hold kind of girl, yes. And if you are looking for brand new construction, please, please, please make sure you have a realtor with you. That realtor will not be able to help you in any way, contractually or with any of the concessions like our team does for you if we're not with you. They will cut the realtor out, you will pay the same price. So I won't be able to give you any of the advantages that one would have otherwise. And the other thing is looking at not just brand new construction, but looking at the construction within the existing neighborhood that's 12 to 18 months old. Yeah. Sometimes we have a military family, they had to move, they've already redone their backyard. They already, they ordered sod, they have a swings, set, they have a play structure, they have a new fence, they have a concrete pad. Pool. All of the things that you're going to pay so much money for that are already done. So I want to make sure we look at all the options and give you all your opportunities rather than just one.
Love that. Well, we're coming up on a break here. Again, everyone, thank you for tuning in to 1380 The Answer, the Real Estate Profits. We've got some exciting news. We're going to expand more on the Dream for All program. What is all available for the first-time home buyers? So you don't want to miss it. We'll be back after this.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit ProMortgageRealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 017-45667.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit ProMortgageRealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017-45667.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
And now we're back. Real Estate Profits, and we're excited to have you listen to us and tune in here with Jessica Couch, real estate agent, killer on the market. She knows how to negotiate everything and anything. She's the perfect person for this show because we're talking about down payment assistance programs. And the hard part on those two is getting not only qualifying, but getting into contract, right? And what kind of market are you in? Well, it's turning into a seller's market. Right. If you've been thinking about buying a home, now's the time. Log on to ProMortgageRealty.com for more information, fill in your information, and we can help guide you. It doesn't cost you anything to see what you qualify for, and it doesn't cost you anything to take the time just to talk to us. We're not going to stalk you. We want to make sure you get into a home before it turns into a seller's market, because I mean, the Dream for All program, the CalHFA program, the Chenoa program, which is the grant for down payment, USDA, VA, all those programs, they're great right now, but when it turns into a seller's market, the only person I know that can get you in a contract is Jessica. And then the other thing is it's hard to get in contract. It really is,
We're going back into a time where it's going to be. Yeah, and I could tell you the last Dream for All, when I got people into contract, we were in that market. It was about a year ago, and the money was gone very quickly, and we were looking at multiple properties, and we got one. It wasn't their ideal property, but with some changes and renovations and the money that they had saved using the program, it worked out. But it wasn't the very first choice because we just didn't have a long time to look around a lot, and we didn't have all of the options that they would have liked to have had. And right now you have a lot of options.
And now they have equity though, right?
Oh, a massive amount.
They got what, $100,000, $80,000 in
equity? We're sitting around 100. Yeah.
And that's 1 year.
Yeah.
1 year. This program came out 1 year ago. They're sitting on $100,000 equity. Right. And that's in a down market.
Right. Well, and we're coming back up, though. I mean, it's all timing, to your point of you make your money when you purchase the home. So if you're selling it in the right market, and they're going to come into the right market as it swings back to a seller's market here in the next couple of months, they could cash out with that.
That's right. Okay, so Dream for All program. Let's dive into this real quick. This is a program that California, they should just keep this thing open, but they allotted $220 million for. It will come out in the spring. When, we don't know. You need to, ahead of time, pass your first-time homebuyer certificate course, because otherwise you won't be able to even get in. It is a different structure now. It's a lottery. So going into this, it was just first come, first serve before, but the lottery is set to where whoever has it, has a first-time home buyer class, they submit the information to CalHFA. They may or may not get it. So what you have to do is be okay with not getting the Dream program and be okay with getting a CalHFA program.
That's
and have two different price points, right? Because what the Dream program is it's 20% down payment assistance, okay? So you're getting more of a house.
And you're in a conventional loan.
You're in a conventional loan. It's a bigger home, and this is a different ball game, right? You need a little bit better credit score, but if you don't hit the lottery, right, which a lot of people won't,
sure,
still a good idea to buy a house,
right?
Right. So you need your first choice, second choice. First choice is the higher price point. Second choice is the lower price point. Either way you go, you're not going to go wrong. You need to get into something, because what's going to happen is I know rents have gone down, right, in this market.
True.
But they will be going up.
Thank you for mentioning that.
And once rates drop, you're talking a high frenzy of housing need. The housing demand increases. Right. More people are hopping in the market. More people are selling. More people are buying. House prices are going up. Hence, rents are going to go up.
Right.
So you are going to see your play with real estate is long-term hold. Right?
Absolutely.
You're going to gain equity. You're going to make money. But the Dream for Home program is a 20% down payment assistance. They share equity at a certain percentage of what you're buying, but you're able to buy a bigger home. If you don't qualify for, say, a $600,000 home or a $700,000 home, well, now you will when you have 20% down payment assistance coming.
Right.
CalHFA, different, 3.5% to 3%. So the level of what you can qualify for is lower.
Yeah.
So, but you're still hopefully able to get into a home. So that is one program that's going to be coming up hot. Again, go on to promortgagerealty.com, fill in information, indicate what you're interested in knowing more about, and we'll guide you. You'll talk to me directly, and you'll talk to Jessica directly, and we'll be able to help you out with that. We talked about CalHFA. Chenoa, that's a grant program, and that's we can go all the way down to a 580 credit score on those.
So I haven't used that in a minute. Can we talk about that?
Sure.
We can go down to a 580 credit score.
580 credit
and the
score.
Chenoa is going to cover down payment, but we will still need to get closing costs either from 401k, gift funds, or from the seller. And as we come into this new market, we're looking at the first two.
You're on
We're looking
point.
at 401k or gift funds from parents.
And people that are doing down payment assistance typically don't have 401k, right?
True.
And they're low on cash, but
Sure.
you can have it gifted. You can have Jessica or any other agent that you know, negotiate a seller credit if they're good at it.
Sure.
And you'll need it because you do need money when you buy into a house. It's not free money everywhere. There's always a catch. So here's the deal on the Chenoa. The Chenoa is you have to stay in that loan for a 3-year period.
Oh, thank you for reminding me of that.
In order for it to be considered a grant. Otherwise, it's repayable. So that's a big thing to know. In 2 years, a year and a half, Fed's already talking about lowering rates 3 times, right, by the end of this year.
Yeah.
So some economic specialists are saying by 5 times, right? So if we're talking 4 in the middle of the road, you're going to want to refinance.
Right.
So Chenoa may not be the right path for you. But if, again, it has the grant program, which is great. So the rates are a little bit higher on Chenoa, but that's if you got a lower FICO score, you got to pay the piper for not being responsible.
Right.
Okay. USDA. Jessica pushes this thing like she had a USDA loan. Okay, so USDA is 100% financing. It's outside of the metropolitan municipal areas. Typically, there's not sidewalks involved with USDA, but you have to go onto USDA.gov and go onto the map, plug in an address. You'll know if it fits within the USDA category, and that's 100% financing.
But we also need to have a clear PES with this program,
exactly
correct?
Right.
So if this, and I've done this before with another family, and we were lucky enough to have a seller go along with giving us a credit and getting all of the work done with our own people, leaving the seller out of it. They credited on the back end with all the closing costs and help with some other things that were covered. It was amazing of them, but they didn't have to lift a finger. They weren't involved in any of the process, and I was able to negotiate all of that. So there is a caveat to this in finding a property that maybe needs a little bit of work, which often I find in these unincorporated areas.
Right.
You know,
do.
It's not
Pest.
Yes. And pest, we're not really talking about mice in your home or roaches, right? We're talking about dry rot in the wood. And if you have wood and it's been out in the elements, it will rot. It's just a fact. So it's looking for those things that we're going to have to identifying what the appraiser is going to note and then what the pest company is going to note, because they're the final say on this and the final say on having the work done correctly.
Same deal for VA, right?
Absolutely.
VA, 100% financing, clear pest.
Yep.
And they need a clearance. They don't need a pest inspection report.
Right.
They need a clearance. So however you get the clearance, that is determined on, you just need a form. Okay, and that form is NPMA 33 to I can't even remember, MPMA 33 form, and that form is for a clear pest. So that's important to know. The other thing that you were talking about earlier is gift. So gift is important. You know, some people have friends, family member, close friend that can gift the funds for down payment. You don't need 20%. You need 3%. You need 3.5%. You don't need to have all that money. Just 3% gift, and you can qualify for a mortgage, right?
And again, in this market, you could qualify for a mortgage and I can get your closing costs covered.
Right.
Potentially a buy down as well. But as this market swings the other direction, now we're looking for 6-7% because we need credits for all of these items that right now we can get and later on will be much more difficult to establish.
Yeah. And if you don't need down payment assistance, shoot, and you have 3.5%, if you got it in a 401k that you can borrow from, I mean, rates are in the high 5s, you know,
I know. So
on
exciting.
FHA. And then
So
rates are in the
exciting.
low 6s, mid 6s on conventional. They're only going to come down, folks.
Right.
So again, you know, you want to marry the house and date the rate, that old thing. They almost hit 8% about 6 months ago, 5 months ago.
Sickening.
You know, and now they're where they're at. They're going to continue to go down, guarantee it. But if you're waiting for rates to drop to pull the trigger on buying a home, you're crazy.
Well, you're crazy because you're going to miss the opportunity of being able to get any credits, and you're going to pay your mortgage is still going to be $2,800 or $3,200. The differential will be that you're paying more for the house and you can't get the credit. Without the credit, I can't get you a buy down. That buy down is a game changer because on a lot of our borrowers, it's been a difference of like $600 to $800.
Yeah,
don't miss that opportunity.
We're combining a buy down, a temporary buy down, which takes their rate based on 4.125 for the first year, 5.125 for the second year, and we're getting a credit to pay for all the closing costs. No money out of pocket, down payment assistance, and a buy down.
I love
right?
it.
And so that opportunity is leaving.
Absolutely.
You have it. If you haven't thought about it, give us a call or text us. Again, if you have any questions during or after the show, text to 916-872-7177. Follow us on the YouTube for Pro Mortgage and Realty. You can see us live instead of just hearing us. And then also have questions about any of what we're talking about, log on to promortgagerealty.com. We're also going to cover some text questions because all of you have been texting and we have not been responding. So I just want to make sure that we do. We'll be answering these text questions as we come back, and we'll be back after this. Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 017456667.
Hi, I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and that has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending $1 out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at promortgagerealty.com. Work with the pros.
NMLS 351319, DRE 017456667. And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Hello, everyone. If you're just tuning in, we're answering questions from the audience and what's coming up for first-time homebuyer programs. We've been touching on the Dream program, the Dream for All program that is possibly going to be released in April, March. We don't know. In spring, they say, though this program is like a lottery. It will be fulfilled in about 7 days, just like it did last year. And if you're interested in buying a home or like to know more about the Dream for All program, we've been talking about that. We also have down payment assistance program. Kind of segues us to our next question or text question is, how do I qualify for a down payment assistance program from Brandy? And it all starts with talking to the lender and beginning that process, filling out the home buyer certificate and the first-time home buyer informational kit. You got to go through a little class, take a little test, and I think it's like $150, $120. You can log on to promortgagerealty.com. More information will set you up. You're not paying us anything ever. So what happens is the sellers are paying for us, and you're getting the deal, and you're getting walked through every step of the way. We're going to qualify you. We're going to see your income documentation. You need to have some steady income, right? You need to have income to qualify for a loan for the most part in general. You need to have income. So we need to have, you don't need a 2-year history on your specific job. You need a 2-year history of work. And
well, you also said they could count college as well,
college,
right?
Yeah.
Now, of course, that's going to meet your debt to income total. So if you're now making $150,000 for the first year, but the last year you were in college, that's going to be a doable income.
Yeah.
If you are at an entry-level position, it's certainly going to affect the amount of home purchase that we can qualify for.
And salary and hourly are different, right?
Thank you for bringing that up again,
salary,
too. Yeah.
you can use it all. And hourly, you've got to average it. You need a 6 months establishment. If it's not full-time, if it's part-time, you need 6 month establishment. If it's full-time, then we just take a look at what it's done. But we can use your transcripts as prior job history to qualify. On down payment assistance programs, this is key to know. You cannot have a non-occupying co-borrower to co-sign. You need to have an occupying co-borrower. So for those who want to work the system already is prepared for your tricks.
Sure.
Okay? And the other piece is that there's two types. They basically give you a slightly better rate if you don't meet an income threshold. But on the normal FHA loans, right? On the conventional loans, you can make $150,000 and get down payment assistance. So it really depends on the county. It's county driven. Talk to your lender and they'll notify you and tell you what you can qualify for.
Sure.
The other thing is USDA also has income limitations. VA does not. Okay. Those are important things to understand.
Yeah.
You want to make sure we're structuring the loan correctly. On regular FHA, if you're bringing 3.5% down or conventional, you can have a non-occupying co-borrower. So parents, aunt, uncle, cousin can go on the loan, help you acquire the property. The big thing is you have to be comfortable with the payment. You don't want this thing to go south because they are liable on credit with your loan. So make sure you take that with a grain of salt.
Yes.
We have another question. Does it cost any money? What does that mean? Does it cost any money? Okay, I'm assuming, does it cost any money up front? Well, the upfront expenses that you're going to have are not only the home buyer class. What else, Jessica? What do you experience as a buyer when you're making an offer and, you got inspections and whatnot?
Well, when you're working with our team, it's a little bit different. And I'm not going to disclose all of those details, but if you are looking for a deal, we do something special and you can call direct 916-532-8916.
Okay.
But the expenses are inspections. You need a roof inspection, a home inspection, a pest inspection, and those inspections will lead us to find out if there are additional inspections. Maybe we have galvanized piping or a problem with the roof. Right? There's a variety of things that could lead to additional inspections. Yeah. You also have an appraisal cost. There's a cost to that. Often there will be repairs that need to be done in order to get the loan. There's a cost for that. And I think it takes, an aggressive agent to be able to negotiate those things. So we want to know about those things up front as quickly as possible and then negotiate based on those items.
It'll cost about $1,500.
Yeah, I'd say between $1,500 and $2,500 depending on
to get all the inspections, all
your
that.
Appraisal.
I know Jessica does do a lot of things where a lot of the inspections are covered, and so just understand that when you're buying a home, you do need some money, right? You just not free money doesn't fall from the sky,
right?
And so that is one thing to understand. You don't pay the lender, you don't pay the agent, right? You just pay for the inspections. You pay for your earnest money deposit. You need your earnest money in there. You gotta put anywhere between. I've seen 1,000 earnest money deposits that you've been able to negotiate.
We write 1,000 all the time.
Down to like 10, 15, 60,000, depending on the type of size of property. So that's there. Your money's not risked when you put it into escrow because the agents protect you. Just make sure you use the right agent.
Right.
Make sure you have a conversation with them. Don't sign off on your contingencies until you know that you've talked to the lender and you've talked to the agent and you're not signing anything without asking questions.
I can't stress that enough. We had a client, a good friend of ours, who almost lost $24,000. And I had a nickname for the agent. This guy said, "Oh, I know what I'm doing. Don't worry about it." And he did not know what he was doing. And I had to coach him every step of the way to end up getting her out of it. And the seller's agent had made some mistakes and made it possible for me to get her out of it. But the agent had removed all of her contingencies. And that $24,000 was on the line. She was about to lose it.
Yeah.
So incredibly scary. You need to make sure that you know what you're getting into, what your, what I call like get out of contract clauses are, similar to like get out of jail and monopoly. You need to know what those options are.
Absolutely.
And if you don't, or you're not clear on it, call me. But you need that's a really big deal. That's a lot of money.
If your agent isn't explaining these things to you, or they're not answering questions when you want them answered, they're wanting you to sign something without answering questions that you have, you need to dump them.
Run.
Dump them. Straight up, dump
Yeah.
them. Call any other agent because that is not good. Call Jessica, call us, call any agent that will, because you do not want to have someone has a fiduciary responsibility as an agent to do those things, to explain these things to you. Some of them get lazy. They take their license and they don't even understand the contract. So very important to speak to somebody who knows what they're talking about that explains these. And I know Jessica does those. The other question that we have is, what's the most reputable credit repair company and should I use one? Now, these came, you always hear of like Lexington Law and all ththese other companies. I'm not a fan of credit repair companies. The only one that I've ever trusted is local, is Blue Water Credit. Jeff Sipes, he's got a good reputable company. If you pull him up on Yelp, he's got a lot of good customer reviews. But oftentimes you don't need that. You just need to talk to somebody who knows what they're doing regarding improving credit score. It could be as easy as paying down credit cards. Do not pay off charge-offs. Consider possibly not paying off collections. Talk to me. I've been dealing with credit for 25 years. I've been doing this. I think, when I started in the business 25 years ago, I had a 491 FICO score. I don't anymore. So I know how to get these scores up. And
Well, what's that going to cost me when I call you and you help?
It doesn't cost you anything. I pull credit. I pay for the credit. We do a soft pull. It doesn't make an impact on your credit score. I've seen every credit score on the planet.
So what I'm hearing is before you call any credit company, call Ian.
Yeah.
Do a soft pull and get some advice, because I have seen you help people within 3 months that didn't have a credit score.
Yeah.
And it was just a matter of taking out a credit card and, having a small balance on it.
Getting a secured credit card.
Easy tricks.
A little $200 secured credit card, $300 secured credit card. Just if you get 2 of those, that can bump up your score 100 points.
Right.
So just little tricks like that. We don't charge it. Credit repair companies will charge. Now, some are good, like Blue Water. I know they do some good stuff, and they'll get some stuff off, like bankruptcies if it legitimately wasn't, or something that just keeps coming on your credit. Judgments. Yeah,
they did help me with the client.
They do help with that kind of stuff. So talk to me first, and then I can steer you in a direction I feel is good.
Good advice.
Okay, thank you. You want to ask number 5?
Where are we here?
Number 4. Number 4. Sorry.
What's the low? Oh, this is a good one. This comes up a lot. What's the lowest FICO score allowed for a loan?
I've seen 520, but it with FHA, what they do is they manually underwrite, and you need a heavier down payment. You need 10%, and then the underwriting process is more rigorous. There's probably a lot of issues on credit, and so you can go all the way down to a 520, but you need a heavier down payment because you're more risk, right? And you need to have a path to move that credit score up. So I wouldn't advise doing that. Most people with that kind of credit score don't have a lot of money.
Sure.
Right? So they don't have 10% down unless it's a gift.
Sure.
So you're not out of the woods. You can get a home with 520, but you need more down payment. And, only certain lenders will do that. We're approved with 23 lenders. Only 3 go down to that. So there's a few certain lenders, the rates are going to be a little bit higher. You're more risk. So
now, what about the folks that say, I pull my credit on, I just got a Sam's Club card. I just got a car loan recently, and I know what my credit score is. How would you say that varies versus the mortgage pull and what they're looking at?
It does. It varies because a lot of those Credit Karma accounts, those dealerships, they're pulling on smaller consumer trade line credits. They're not pulling on larger lines.
Okay.
And so mortgage pulls will often come a little bit lower than what you pull on yourself. We use the middle of the 3 scores. There's Experian, TransUnion, and Equifax. We don't go off one. We go by the middle score. So they're kind of similar, but if you're banking on a mortgage just with that, we have to pull credit.
Sure.
End of discussion.
Sure.
And so we can get your score up, but ultimately you don't need 800 FICO score. You don't need 720. We do a ton of 620, 640. 580 is iffy, but you start needing down payment below 580.
Sure.
Right?
Sure.
So, yeah. To answer your question, it varies a little bit. So just be cognizant. Talk to the right people. Don't do a hard pull.
Well, and it
soft
starts
pull.
with and I thank you for mentioning that. Not everybody does a soft pull, and they end up with a million different lenders calling them number one problem, and then second, the inquiry alone can change their credit and impact it. So you really want a soft pull, and it starts with the end. I think that's the moral of this story. It starts with the end. You call, it's free. Free. He's going to pull your credit. He's going to have a plan to help you. We've done it with several of our borrowers, especially those using down payment that really didn't know where they were or what to do next.
Well, thank you for saying that, Jessica. It is free. Go on to promortgagerealty.com for more information. If you like your credit pulled, know about more of the first-time home buyer program. We're coming up on some remainder of the text questions and talking about some of the listings that we have coming on the market.
Oh, awesome.
We'll be back after this. Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 017456667.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 0174567.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Welcome back. Here with Real Estate Profits, I'm with Jessica Couch. We've been hammering on text questions, down payment assistance programs, and the Dream for All that's going to be coming out for the 20% down payment assistance, which is huge, huge, huge. It's going to be a lottery coming out in spring, and if you don't want to miss that boat, and most people will. If you have questions on any of the down payment assistance programs, log on to promortgagerealty.com, and we'll connect you free, no charge. We won't charge anything to see what you qualify for and if you qualify for it. And
something you mentioned that I think bears repeating is that if they want to get into this Dream for All program, that is not the only program, and it is a lottery. So you want to make sure that you're in the lottery for that program, and you also have a plan B, and Ian can help you create that plan B. Don't just have one option. We are a fan here at Pro of many options. We want to give you as many options as possible.
You want to buy a house,
right?
Plain and simple.
Yeah.
Well, you're going to have your higher end home with the Dream for All program and your lower end, and you got to be okay with both.
Sure.
Because if you're not going, if you buy a house this year, right, within the next 2 months, you'll see a 9 to 10% increase of equity gain. That's what all the economists are saying. Okay,
well,
that's what Fannie Mae
is
saying.
Yeah.
That's what Fannie Mae is saying. So that's almost double digit again. Now next, when rates drop, you're going to see that tick up to like 15%. You own that home for 2 years. It's $500,000 home, right? That's you're looking at over $100,000 of equity in under 2 years.
Right.
Rates are going to bottom out. They're going to be FHAs are going to hit the 3s again. I feel, and conventionals are going to hit the low 4s.
Right.
And
well, this is
and
just,
so what's going to happen is then you can refinance into that lower payment, and you could either sell and you're sitting on a wad of cash for a down payment on a new home,
right?
Or you just ride the equity train. So,
well, and not to overstate this, but not only are you refinancing into a lower rate, you're refinancing and getting your PMI off.
Yeah,
you now have
that's
equity.
Key.
So I think, it's a prime time.
Yep, and FHA did lower it. You know, the PMI is 0.55% on FHA. It was 0.85%. So it's come down a lot. So sometimes in some cases you can get an FHA loan with a higher lender credit. Get your rate to like 6.25%. I can give you $7,500 on a $515,000 mortgage, right? $7,500 credit. If you can't negotiate a credit from the seller, sometimes you got to go FHA to get a higher credit.
Right.
And your rate's still decent. So those are options that we can help you strategize with. And I know Jessica's a pro at this. So
I am an aggressive negotiator, and I would love to be able to help you.
Yeah. And here's another question here. I want to sell my current home for $150,000, and I want to sell my current home with $150,000 of equity and buy a new home. But I'm self-employed. I don't show income. Are there any programs?
I think I know this woman.
I hear it all the time.
I think this comes up pretty often. Yeah. So, I mean, I have an idea on this, but as our lender,
you go.
Well, you know, my first thought is maybe we don't want to sell your home. Maybe we want to pull that equity and in a different format to be able to use it. And then we want to strategize how we're going to structure your loan, because if you're not claiming income, that's going to be a problem, right?
Yeah.
There is the DSCR program, right? You could use something like that.
The DSCR will, if you're buying an investment, right? But I know what you're talking about. There's two ways to do it, and I'll just chime in here.
Yes, please.
Is that if you are self-employed for 2 years, I repeat that, 2 years or more. Then,
now, do your taxes have to show that for these 2 years?
They need to show that you've been self-employed. You need to demonstrate you've been self-employed for 2 years. Now there are business loans that you can do. You can do a HELOC to access some of that equity. Interest rates are higher.
Sure.
Points may be charged, but you can access some of that money. You can buy your next home with no income verification as a self-employed borrower. Okay, and what they do is that there's one company that we've got that will do this with the heavier down payment, so you can access your down payment that way. DSCR only works when you're buying an investment property and it's based off of rental income on that investment, and you have to own your own primary. So you can buy a property for investment purposes.
Okay,
but if you're looking to upgrade, a little harder. There's also bank statement loans. Now, if you show heavy deposits in your bank statements, like let's say, for example, $15,000 a month goes in there, well, I can basically take half. Okay. And now I can use that as income. Okay. I need 12 or 24 months bank statements. Now we're looking into financing. We just did a bank statement loan and contract right now at 7.375%. Wow. Not bad.
Yeah.
Right.
I mean, if that's your only option, it's better than renting.
No points.
Yeah.
And that's with the guy had a strong FICO, 780 FICO score, $400,000 loan amount. Not bad. Okay. So there are options for you. Again, just don't Google it because you're going to get trapped in a wormhole. Don't pull your credit 1,000 times.
Sure.
Talk to somebody who knows what they're doing.
Yeah.
Okay. The other question is, you want to, this one tricked me. Okay. This one tricked me because this question is important, and I had to get learned a little bit. And because the guideline, I'll first ask the question is, I tried qualifying for a 4-unit residence, and the lender said we needed to find a lower price property. Before we started, they said we could do it. I was under the impression that I could use those units to help me qualify on this loan. This was a 5% conventional loan. Please help. Well, before I dug into the guidelines deeper, Fannie Mae released a thing where it used to be 15% down.
Right.
Okay. And, or 20% down. Yeah, it was 20% down, but you can only utilize the other units to help you qualify for the home. But you needed a heavier down payment. They changed that guideline to 5% down. The trick here though is that, if you look the high balance loan limits, if you Google it, high balance loan limits in a specific county, every unit, the amount goes up.
Right.
But that's high balance. They won't go high balance. They'll go conforming limit. So
Okay.
it lowers the amount that you can borrow. Okay. And this is something I found out. Luckily, I found out before they got in contract. I was pre-qualifying them, and I like to dig a little bit because I don't want to be an idiot like this guy. So I almost was, though. And so I didn't understand that there's conforming and there's high balance conforming. You want to make sure you clarify, how many units it is and what county it is in, because it does not adhere to the high balance loan limit. So
it's good to know.
I didn't know that. I do now because luckily I was qualifying somebody who's a firefighter, makes $150,000 a year, and I was about to go to $2 million in Orange County.
Oh wow!
And it brought it down all the way to $1.3 million.
That's a decent difference.
You can't buy anything for $1.3 million. A 4-unit in Orange County, you can't.
Right.
So if I wouldn't have gone that, we'd have gotten contract, and I would have found this out the hard way. FHA, now here's the trick on FHA. FHA will allow you to utilize the full rent on the other unit on a duplex. Okay. Now, what we did is that the FHA loan limit on a duplex went higher than the Fannie Mae conforming limit on a duplex. So we're able to get a realistic number at 1.3 on a duplex for FHA, and I can use the rental income with 3.5% down. Okay, so that's a little trick. The other thing is that on FHA, in order to use the other units above a 2-unit, like a 3 and a 4, all rents on the property, the 3 units, let's say it's a 4-unit, all 3 units need to be able to pay for the entire mortgage payment in order to use that income.
So we may need to do some,
mind blow.
May need to bump the rent here. Well, and if you have somebody, this is really good information to have, because if you have somebody who's on a lease, let's say they have 6 months left, we can't bump the rent. We really need to figure out a co-borrower or some other plan to make sure that we can get you into that property. But this goes back to, really having a plan at the beginning rather than being out looking at property, falling in love with the property and then not being able to get it. So
that's
going through this strategy up front is the way to go.
So those are the end of the questions, but I thought that was we got just a couple minutes left on the show. Jessica, I know you've been our focus here is anything derived from the show. I just want to touch on this. 10% of our profits go to the Sweet Dreams Foundation. Okay, so if you have any interest in donating to the Sweet Dreams Foundation, they can you just enhance what they do?
Yeah, we do dream bedrooms for children battling life-threatening illness, and we also have a NICU program for babies that are born early that need more tummy time.
Okay, so this program is amazing. So if there's a kid with a terminal cancer and they're going in and they're in and out of the hospital, when they come back from the hospital, they're going to have their dream bedroom built for them.
It's a real tearjerker.
I mean, I've
it's
never
great to be a part of.
And Bayside Church does a part of it. I know we both go to Bayside, but it's an amazing thing. If you have more questions about if you want to contribute to them or be a part of the show, just how do they get a hold of you, Jessica?
916-532-8916. Also, if you'd like to volunteer, be part of this, it's a ministry for sure. It's a faith-based organization and definitely ministry. So it's something I've been involved with for 10 years. If you want to show up, you're like, I can't paint, I don't know how to build a bed. Maybe you know how to bring cookies. I have a lot of folks that we know in our community that have children of high school age or junior high that have to fulfill hours.
Yeah,
and often that's what they do. They bring in cookies. They'll come and help us do videos. So I don't necessarily need you to paint. If you've got $5, 5 minutes, come and join us.
That's right. It's not all about you.
It's about our community. That's
right. Well, thank you for tuning in to 1380 The Answer, listening to the Real Estate Profits. Find us on YouTube at Pro Mortgage Realty, and we'd love to talk to you more.
Yeah.
And thank you for listening. If you missed our show, you like more, you can go onto the YouTube channel, log on to promortgagerealty.com, ask us any questions, ask for Jessica, ask for Ian. We'll help you out.
Yes.
Thank you for listening.